been a significant week all around. I just talked about oil prices. Let me get Victor Adair on the line with me because there's so much to talk about. Vic, thanks for taking the time a little bit early today, but it sets the stage for Greg Weldon for us. As I keep saying, there's I start with that Clinton-Trump debate. That seemed to focus everybody, and the market certainly reacted to it.
Well, I guess the hype was there was going to be 100 million people watching, and my favorite barometer of how the debate went is how the Mexican peso has behaved, and that might seem a little odd, but it is tied. I'll tell you that the peso in the 2 weeks leading up to the debate fell steadily, the same time as Donald Trump seemed to be doing better and better in the polls. And immediately before the debate, the peso got to almost 20 pesos to $1 US foreign exchange rate. In other words, that was an all-time low on the peso. As the debate progressed, Mike, the peso just started to jump higher as people were voting that, oh, hey, Trump's not doing so well. And we just kept going for the next couple of days. We had quite a significant turnaround in the Mexican peso, right tied to the debate. And, in other markets, even Canadian dollar to some degree, the stock market to some degree, seemed to say Trump is less likely to do well, and Hillary's more likely to win the election. That seemed to be the market's take on the debate.
What about that kind of trading, though? I mean, that's certainly a trader. An investor shouldn't be looking at that stuff. But even as a trader, I guess if there's an opportunity, you take it. But it just seems like such nonsense. A little bit like the OPEC, too, when they sort of announced they're going to get together to agree to get together in November so they can not have a production. You know what I mean? And the markets move so dramatically now. Yeah,
well, I mean, the markets actually this week, my thought was the price action was very choppy. And it was tied to, a number of things, but certainly three things. One was the debate. The second, what I call the OPEC surprise announcement. And then, if we have a moment, we can get to it, what I call the European banking crisis. But I'll listen to what you and Rob discussed on the OPEC announcement. If I could add anything, I think that some of the analysts that I read saw that this Saudi Arabian willingness to be part of any supply agreement was a game changer, and their willingness was maybe brought about by deteriorating financial conditions in Saudi Arabia. Their stock market's been falling. There's been intense pressure on their currency peg, so maybe they decided that if they could do anything, to cap OPEC production, that would be good. Drew and I, our view on this is that what they were really trying to do was not so much cap supply, but they were trying to put a floor under prices, and in the short term they certainly got that. As Rob Levy was just saying, prices popped about 5% immediately following the agreement. So you wave things around, and and they got what they wanted, is what I'm saying, in the short term.
Let's come to that European banking crisis, because obviously I think that's the top story internationally right now, above what the OPEC thing is. And really, because it's, as we've been talking about on Money Talks, it focuses on Deutsche Bank.
Well, Deutsche Bank is a huge German bank. Their share price was $160 in 2007. It fell to $20 during the financial crisis, rallied back to about $80, and in the last few years has been in a steady downtrend, and on Thursday of this week was at $11. That's a long way down from $160. The American Department of Justice has threatened to hit them with a $14 billion fine for mis-selling mortgage-backed securities back, during the housing boom prior to the crisis in '08. And if they did hit them with that, that would wipe out their entire equity. Now, here's another take on the European banking crisis, and that is, for the longest time, I mean, everybody, the traders, they know it's there, but it's like tomorrow's problem. This week, it suddenly became today's problem. We saw on Thursday, I believe it was, just in the course of an hour, like the Dow Jones peel off about 100 points, particularly with weakness in bank share prices. So the risk of a contagion where one bank gets into trouble and then, sort of like measles going around, all the other banks get into trouble as well. That was the worry in the market. The German government says they will not come in and bail out Deutsche Bank, but of course everybody thinks they will. They have to. They can't let this bank go down. So it is a Gordian knot, that's for sure, but it's important to the market in terms of confidence.
I like that. You're right. It's a Gordian knot. We haven't used that on the show too often, but I like that analogy. Hey, Vic, we got 30 seconds for your short-term trading. What are you looking at?
We're staying with our view. We like the U.S. dollar against other currencies and commodities. We think that reaching for yield has caused many assets, including some stocks and junk bonds, to become overpriced while risk is underpriced. So we continue with our short positions in Canadian dollar. I was short the stock market. I took that position off. The market had a wonderful opportunity to go down this week. Didn't really take it, so I just stood aside. Yeah, so basically we're remaining bullish the U.S. dollar, short Canadian dollars, euros. We're short crude and gold. We lost some money on our short crude position this week, but made money on gold.
Great stuff as always, Vic. Thanks so much for taking the time.
You bet, Mike. Thanks. Bye.